Well, hey guys, welcome back to the channel. Happy Valentine's Day, huh? I just want to say that. This video is going to be a little different because I want to talk about my favorite SPAC investor right now. The guy who's like the SPAC king right now, Chamath Palihapitiya. I just finished a Bloomberg interview. I watched it today that he just had the other day, and it was a fantastic interview that he did on Bloomberg. And this article from Market Insider talks about a few quotes from Chamath, and it, I'm talking about him on Valentine's Day because not because I love him, but I would certainly take him out to dinner. You know what I'm saying? Hang out with him, maybe give him a little hug. We could hang out. I like Chamath. He seems like a cool dude. He's rich as hell. Probably weird and eccentric like every other billionaire, but it seems like even if he's not trying to do the right thing, it seems like he is. You know what I mean? And this interview really solidified that for me. Okay, that he talks about wanting to do the right thing, and that's why his company is called Social Capital. And so we're going to go over this article. It says, nobody's going to listen to Buffett. Chamath Palihapitiya called himself the figurehead of the Reddit trader era in a recent interview. Here are his 10 best quotes. Now, this nobody's going to listen to Buffett thing is sort of taken out of context. He said that, but he said that in a much bigger way. And you'll see that here in a second with one of his quotes. So let's just jump right in. Let's jump right to the quotes, huh? On Warren Buffett, he says, nobody's going to listen to Buffett. Buffett doesn't have the energy to say what he said 30 and 40 years ago in 2021, and that's okay. He's basically earned the right to chill out and be the GOAT. If you don't know what GOAT means, it doesn't mean your favorite cheese, goat cheese, guys. It means greatest of all time. LeBron James, you know what I'm saying? Warren Buffett. He's earned the right to chill. That's what Chamath is saying. Not that nobody should listen to Warren Buffett. Take that quote out of context. He's basically earned the right to chill out and be the GOAT, but there have to be some other folks that take that mantle, take the baton, and do it as well to this younger generation in the language they understand. Number 2, on Twitter being his preferred platform. He says, I am a byproduct of my generation and media culture, which is faceted. Not always great facets, but multifaceted. And so you have to speak in the language of the time in order to get your point across. That quote comes from a part in the interview where he's talking about how he doesn't always deal with things well at first, but eventually, like the guy asked him a question, he goes, and Chamath answered it, and the guy goes, "Oh, that's a very thoughtful and sobering response. Yeah, it wasn't that way a couple weeks ago." And Chamath goes, "Yeah, I know. I don't always react well when I first get news, but eventually I learned the facts." And that was part of that quote there. Again, a lot of these quotes are sort of taken out of the broader context. On the GameStop saga, hedge funds and short selling. He said, I doubt that in the end, in the final analysis, that there was any collusion of any kind, but just the stench of this whole thing just goes to show how difficult it is for normal everyday folks to have access to any kind of return. So if we break down the capitalist philosophy, they are just fundamentally stuck in this cul-de-sac of always being labor and always being sort of the ownership of capital, of the ownership class. Number 4, I still think hedge funds will do well. I still think that there are some folks who are incredibly talented who will make just a ton of money for themselves and their investors, but I think disclosure needs to go up. He believes that things need to be more transparent, okay? Number 5, in terms of short selling, I buy the fact that it's an important part of the market. I'm not a huge fan of it. I do think that certain folks really use it to run a neutral strategy, and I think that's great. But I also think that now in the world of social media, And we've seen this resulting disinformation can be used to not just cause political damage, but disinformation can also cause economic damage. And so I think that the SEC is going to have to deal with that issue and figure that out. It's a big one. All right, on SPACs. Number 6. I think that SPACs are very much here to stay. Using the language of inequality, it evens the playing field. It democratizes access to high growth companies. How? Because it allows retail and it allows long tail institutional investors, folks that might not have necessarily been tier 1 hedge funds. Now they can also play. That was one of the big takeaways for me was Chamath talks a lot about inequality and talks a lot about climate change. And those are his like main two staples for whether he's going to choose to invest in a company or not. So keep that in mind when you think of Chamath and the different IPOEs and Bs and Cs and As that he has, okay? Number 7, when I used to manage institutional capital and early stage investing, I charged a 30% carry, no hurdle, no nothing. If people were willing to pay that, I could generate returns, and I have, 30+% over the last decade. That's justified a 30% carry. Similarly, here on the deals that I do, I take a 20% carry, and I think that I can find targets and opportunities that will make that more than reasonable in the final analysis. They were talking about all of the different fees and things that SPAC promoters and people that bring these SPACs, these companies public, charge. And I think Chamath is doing a good job at not taking as much as some of the others, but 20% is still quite a bit of these companies. On cryptocurrencies, I am building a fairly sizable portfolio of what are called NFTs, or non-fungible tokens. Some digital art, some virtual trading cards, and these may sound crazy to some, but I do think that that's the next frontier of digital currency and digital assets. So I have been building a portfolio. There's actually a bunch of companies that are getting to these digital assets, these one-of-a-kind digital assets. Pretty cool stuff. On a big tech breakup, well, I think they need to get regulated. I think that companies like Facebook and Google will be subject to much stricter laws. Section 230 will change and recognize them as quasi-publishers. Number 10, for Microsoft, Apple, and Amazon, I don't think much is going to happen. The reason is because I think that those guys are generally on the right side of history, and they generally don't err towards types of hot-button issues that politicians care about. Facebook and Google threaten the institutionalized structure of power and influences that codify politics. Amazon Prime doesn't do that. All right, so the 11th quote, not part of this article, that I want to get into is he was talking about the retail investor in general and how most investors get things wrong. Now, you are probably familiar with my channel because I do a lot of talk about stocks, right? And I talk about investing, but I don't talk about long-term investing enough. Now, I am a long-term investor as well as a swing trader, okay? I don't just swing trade, but I really enjoy swing trading. I love trading. And for people that don't have the right strategies, that know when to get in and out of stocks or have any strategy at all, swing trading is probably a terrible idea. Like, just going to be totally upfront, okay? It's probably a terrible idea for you to try to swing trade if you don't have any sort of strategy. What makes my strategy a strategy is I have a plan beforehand, right? I know when I want to get in and out of a stock, or at least I have an idea of when I want to get in and out of a stock, okay? And a lot of people are just hoping to hit home runs all the time and knock it out of the park, and a lot of times you hold on to things too long and you lose money. He talked about, they were talking about the retail investor in general, right? And how it's a great thing that more and more people are getting into investing, but a lot of people are doing it wrong. And he said, put money in the things that you care about and then do nothing. And he talked about how most people have an issue doing that last part. Just letting your money work for you. Just invest and then do nothing. That's what I'm doing with companies like BNGO and Senseonics and Nano Dimension and CCIV. I believe that if CCIV merges with Lucid, the stock's going to go up. I don't have to do anything, right? I put that money in there and it's done. My long-term portfolio is up 140% or something crazy in the last month. So if you invest with conviction, and you invest in things that you believe in, and you've done the research, most of the time you don't have to do anything, and you can get some pretty solid returns. So, guys, that's all I have. I really like Chamath. I'm not in love with him. Never met the guy, but it's Valentine's Day. I thought I'd talk about my favorite SPAC king right now during today. So, guys, that's all I have for you for this video. Happy Valentine's Day. I hope you're all doing well. I hope you're doing something nice for somebody you love. Even if it's one of your kids, it doesn't matter. Just do something nice for somebody today, okay? I've made 2 videos for you guys today. That's nice. So I care about you guys as well. Thank you so much for joining me for another video. Again, I'm Richard Allen. If you didn't already do it, click that beautiful red subscribe button down below, and I'll see you in the next video. Thanks.